welcome back, everyone. I hope you're all doing fine and well. This is our beginners class. All right, we have beginners class every Tuesdays and intermediate class every Thursday. All right, and what we'll be discussing about today is the trading styles. Okay, who are you? Okay, not everybody will be able to swing trade. Not everyone will be able to open a trade and go ahead and sleep. Leave a trade to run overnight, over the weekend. Not everybody will be able to do that. Okay, and not everybody should. Okay, if you can't, you don't need to. You shouldn't be forced to do that. Okay, that's why I'm going to be I'm going to exposing you to the type of trading styles that you can incorporate into your trading strategy and see if it works much better. All right, moving forward. So, but before then, I want us to quickly check the pairs, the trade we have going on today, the one we actually opened. All right, the one I called this morning and we are currently in on. So we're going to be talking about that in a very few minutes. Okay. So the first trade we're able to join this morning is this USDC HF. All right. I took a buy right here and it's working really well right now. We're witnessing a little bit of a pullback, but because of the the characteristics, or let's say the attribute of the trade, it is swing trade. So I'm definitely going to leave this trade over the night. Okay. So we see how it goes moving forward. And then the second trade I'm also in is pound dollar. It's ranging right now. It's in the letter. It's like a mess. Okay. This trade is like a mess, a bunch of mess. I don't know how it's going to go, but I opened it since Monday right here. Today is Tuesday, and you can see where it is right now. So if I'm fortunate enough, I'm going to see the market break below here, pull back, and then it comes down. When it pull back, I'm going to take another sell for sure. And if it doesn't, this breakout didn't happen, and I'm not quite fortunate on this trade, basically, quote unquote, on this particular trade, I will get a stop out before tomorrow morning. But before then, trade is still running, a very small profit. We see how it goes in the morning. And lastly, we have this Aussie dollar pair we're watching. I think the market has already closed. There's no point in actually adding it to the pair again. Okay, these are the only trade I'm currently in. I'm in on GU, and then I'm also buying USDCHF. All of that said, now let's go straight into the proper session of the day, where I'll be introducing you to what type of trader are you. Okay, this is a very interesting question that almost everybody should ask themselves. Okay, what type of trader are you? Are you a swing trader? Are you a day trader? Are you a position trader? Or are you just a scalper? Do you just want to make a few buck in the market and then let go? Is your plan just to make a few buck in the market and let it go? Are you the kind of person that you don't want to sit on the chart for a very long time? You don't want to be watching the market all the time. You just want to take a couple of minutes out of your time and do what? And pick some really interesting trade. Is that the kind of person you are? Okay, you can be whoever. Okay, the market is not made to confirm you into a, or to limit you into a box. That's not what the market is there for. You are to make it what you want it to be. Okay. The moment you are not, what I'm trying to say in essence is you are not supposed to be a slave to the market. You are expected to be what? You are expected to be the king in the market. Okay. Or let me say the king of your what? Of your emotions, the king to your what? To your psychology, the king to your trading plan, to your strategy. Okay. You have to be the person that makes decision and not the other way around. Okay, don't let the market make decision for you. Okay, the moment you're allowing the market to make decision for you, that is when you lose. Okay, that is when you lose. The moment you're allowing the market to make decision for you, the moment you're letting the choice of the market to overshadow yours, then you're losing. Okay, then you lose. Okay, so it is as simple as that. So what type of trader are you? What is your trading styles? For me, this is a question that I had to battle with for a very, very long time. Okay, I had to do what? I had to battle with this for a very long time. Why? Because it's it's I don't know how to put it. It's a very, very psychological thing because you make a profit today trading 5 minute time frame, and then someone is telling you he made a profit on 1 hour time frame. You went to the 1 hour time frame and you made a profit. Good. And then you went back the second day to your 5 minute time frame that you love to trade, and then you made loss two, three times. And you were like, okay, no. You went back to the 1 hour time frame for the past 3 days. I mean, for like 3 solid days, you're making profit. You're like, okay, I guess 1 hour is my time frame. And then a couple of weeks down the line, you started losing again. You're like, okay, I need to go back to 5 minutes. I mean, this is something I did for over 2 years. From 5 hours, I mean, from 5 minutes to 15 minutes to 1 hour, back to 15 minutes, back to 1 hour. It's just back to back. It was my journey was quite dramatic. It was quite what? It was quite dramatic. It's a lot of show. I don't want to say a lot. It's something show. All right. It wasn't pretty. Okay, so but the thing is, I was trying to conquer the market. I was trying to allow the market to make decision for me, whereas I have to be the one to make decisions. And by what do I mean by letting the market make decision for me? What I mean is that I'm trying to place my value on my decision based on the profit or the loss that I made, which is not true. You have to build a strategy. First off, you have to build a strategy. When you develop a strategy, that is that and only that you can now what? You can now make a decision based on the rule that you've already designed. As a beginner that you're just starting up, most beginners start with what's it called again? With gold. And that's why majority of us, when I ask the question in the morning, which pair is the most popular? Is between gold and euro dollar. And majority of you, I mean, a bunch load of us, the big number of us actually go with gold. Why? Because it is easier to sell. With 0.01, you can easily make $10. And it's not the same with euro dollar because euro dollar is more like a slow moving pair. All right. But that is not the very best place to start with. Before you can trade gold, you need to first ask yourself, what type of trader am I? As a scalper, trading gold is a very, very tedious and very stressful job to do. Okay. As a swing trader trading gold, you get a much better chance to relax. Okay. But at the same time, one or two things can actually sweep you off your feet. So the question is, what type of trader are you? The only person that can answer that question is the person you see when you look at the mirror. All right. But I'm going to simplify the answer to that question for you. I will see how I can guide you into answering this question all by yourself. All right. So let's go. So now let's talk about trading styles. Okay. We have scalping, we have day trading, we have swing trading, and we have position trading. Now, if you ask me what category of trader am I will categorize myself between these two because majority of you can attest to the fact that there are some time I will open a trade and I will close it that same day because my take profit get triggered. Okay. So because I opened a trade in the morning by 7 a.m. and I was able to close the trade by 7 p.m., it doesn't make me a day trader. All right. It's just how the trade works. It's just the fact that the trade just decided to just close that day. Okay. So, but I am leaning, or I will say I am more leaning towards swing trading. Okay. If I'm fortunate and lucky enough, yes, some of my trade might close on the same day. Or let me say, few of my trade actually close that same day. But it is very rare. Okay, it is what? It is very, very rare. For me to open a trade and close it that same day. All right. So it is very rare. However, it is not impossible. Okay, it is not what? It is not impossible. So now let's start with that. I just explained my own kind of trading strategy, my own trading style. I am a swing trader. In a nutshell, I am a swing trader. I leave a trade to run for several days and sometimes weeks. I don't care. Okay, I have the tendency to leave a trade to run for several days. By several days, it might be 2 days, it will be 2+ days. Okay, any trade that can run for a day, I mean 2+ days, then you become a swing trader. If you can leave a trade to run for 2 days, 3 days, 4 days, 5 days, whatever days, you can be categorized as a swing trader, which is where I stays. All right. So now let's talk about scalping. Okay, scalping is a short-term trading style. A short-term trading style. I can even tell you is the shortest term trading terms because it takes around seconds or minutes to complete. Okay, you don't need more than 30 minutes to finish your scalping every day. You don't need much more than maximum 1 hour. Maximum 1 hour. A scalper trade between 1 hour, between 30 minutes to 1 hour, in the range of 30 minutes to 1 hour. Believe me, I'm going to show you an example of my trade that I opened on gold. I made roughly $95, okay, and I scalped it. And it ran just for 5 minutes. Okay, I started trading in time. The trade, I opened and closed the trade in a time frame, or let me say, yeah, within 5 minutes. Let me put it that way. Okay, in the constraint of 5 minutes, I open a trade. I open like up to 15 trades between 5 minutes. I'm going to show you the video right now so you can watch, but after this. So next one is day trading. Okay, it's also a short term because it's a maximum of 1 day. They do not hold position overnight. Okay, if you're the kind of person that if you open a trade, you will find it hard to sleep. You will find it hard to breathe. You might not want to be a swing trader. You might just be a day trader. Open the trade in the morning and close it before you go to bed. Either in profit or loss, you don't care. You open it in the day, in the morning, and you close it in the evening, whether in profit or loss. If it's a loss, you take the loss and you go and sleep. If it's a profit, you take the profit and you go and sleep. And if you're fortunate enough and your trade trigger profit before the end of the day, fine. If you're fortunate enough, the trade close out in loss before the end of the day, fine. Or before the time you close for the day, fine. But if it doesn't, you might have to manually close those trades. When you know that there is potential in those trades, when you know there is potential in that losing trade or profitable trade, you still have to close it as a day trader because it's a maximum of what? 1 day. They do not hold position overnight. Over the past couple of weeks, or let me say over the past couple of years, let's just say that, I'm about to argue this with a couple of guys that say, I don't like closing loss. So if my trade doesn't is in loss, I don't close it. I have to wait till the next day. And I said, you are no more a day trader. You are a swing trader. They said, no, I'm a day trader. I mean, day trader based on English language and what we all learn on Google. All right. We don't know who put that there. We don't know who started it. But a day trader is known to never open a trade or carry a trade overnight. So you're telling me that you are going against what we already know, what we all know to be a day trading, and then you decided to just carry trades over and call yourself day trader and not a swing trader. It's some arguments are very, very ridiculous to have, but sometimes you just want to have them just to fulfill your righteousness. I'm just saying. But in my own simple term, based on what I've been able to gather on Google, okay, the day trading is a short-term trading styles and the maximum of 1 day. You do not open a trade overnight. Okay. Now let's talk about swing trading. Swing trading is a short-term slash medium-term system, or let's say trading style. Okay, because to get to open a trade overnight, over a single night or more. Okay, you can open a trade in the morning right now, like we opened, like we did on USD CHF and pound dollar. And then the second day, you close it in a profit or a loss. You are a swing trader. So far, you open it for more than 24 hours because within 24 hours, there will be morning, there will be afternoon, there will be evening, and there will be night. If you can let that happen and you still have a trade running, you are what? You are a swing trader. And it's a very good place to be. I don't have any problem leaving a trade to run overnight. I don't even anything above 9 p.m. I don't even check my MetaTrader. I don't check TradingView. I don't check anything. If there's notification, if there's an alert got triggered, if any alert got triggered, maybe I'll go and check it. But if there's no notification, if there's nothing, I'm not going to check it until the next morning, at least by 6 a.m. the next morning. All right, because I've built myself in a way that trading do actually get me entrapped or get me hyper at all. Okay, I'm just quite calm now. I take losses though, and I take good profit as well. But I am not super attached to my trade. And it's not like because I don't care, it's just because it is the way it is. Okay. And lastly, we have the position trader, which is a long term. Okay, it's what? It's a long term. You can open a trade for weeks, months, and sometimes years. This is where you see the institution traders. Okay, they are the one that will open position. They will keep adding to those positions for months and months and months. Okay, they have the money, they have the time, they have the patience to hold trades. I mean, you have to cater for your needs. You and I, as a retail trader, we have a lot of things to do. I'm not sure we can afford to leave a trade to run for months. I mean, come on, man. How are you going to feed yourself? Unless you have something else you're doing with your time, maybe you are earning serious money from somewhere else, then you can leave a trade to run for a couple of months or maybe a year. But it's very rare for you to see a retail trader that leave a trade to run for a year. It is extremely rare. And I know what I'm saying. It is what it is extremely, extremely rare. So what are we talking about now? So as a trader, it's your it's your decision, or let's say it's your responsibility. Yes, it's your responsibility to make a choice between these three. Okay, you have to be good with it. Whichever one you pick, whichever one you decide to go for, you must make peace with it, and you must be ready to do what? To go all in. Okay, you must be ready to do what? To go all in, regardless. Okay, regardless, whatever happens, you must be ready and be willing to do what? To go all in. You have to stick to it. Okay, you don't swing trade today, then day trade tomorrow, then scalp day after that. No. Is that you scalp all through for like 6 months to know how strong you are, or you day trade for 6 months to know how strong you are with the strategy, or you just swing trade for 6 months to know how strong you are with your strategy. Okay, there is no other way out. But if you want to play the three ways kind of show in the trading in the trading industry or in the business, of course, you can as well go ahead and check it out. And whatever the results you see, I believe you should be able to take responsibility. It's not your broker's fault. It's not the market's fault. It is your responsibility. So moving to the next one. All right. So right now we have position sizes. Okay. Some of us as a swing trader, okay, you will see majority of swing traders and day traders, you will see us with smaller lot sizes. Okay. So let me paint it like this. So you see people that are using standard lots the most, okay, are scalpers because all they need is just 10 to 15 pips. 10 to what? 10 to 15 pips. So if you use if you're scanning or you are anticipating to make just 10 pips and you use one standard lot, okay, that is $100 straight on a single trade. 100 solid dollars on a single trade. But for day traders, you are the one, they are the one you will see around here. Okay, or maybe they will use mini lot, they will use 0.4, 0.5, just to do what? Just to keep afloat. Because at the same time, they want to make profit, but while doing that, they don't also want to get exposed too much. So they might want to keep their trade down, their position sizes down to mini lot size based on their account as well. Okay, if you're trading $1 million and you want to risk 1%, I mean, you can as well just go crazy with the lot size. You understand what I'm saying? If you're trading a $10,000 account and you're trying to risk 1%, which is $100, then yes, mini lot size will be where you want to be. But if you're trading a $1,000 account and you are a scalper, you want to try one standard lot, you want to just try it out. If you know 20 pips is just $200 and you close it, that's all for the day. So you're anticipating for 10 pips profit and maybe 10 pips loss. So, and for scalpers, it's always like 1-to-1 risk to reward ratio. They don't look for 1-to-5, 1-to-10, 1-to-2. No, 1-to-1. 10 pips profit, 10 pips loss, and they're gone. You understand what I'm saying? And that's why most of them actually sit on gold because they know gold breathing alone is 10 pips. Just gold breathing out is 10 pips. If gold now decide to breathe in deeply, you see 20, you see 30, 40, 50 pips. All right. And some of you that trade gold, you know what I'm talking about. So for position traders, okay, you will see them also around the mini, okay, or micro, especially if you're a retail trader. I've seen some retail traders that they are position traders as well. Okay, you see them with 0.01, they will be trading a $20 account and they will still be using 0.01. because they know they are willing to leave the trade to run for months. And why? Because they are analyzing the chart on the monthly and weekly band only. You will hardly see them on the 4 hours or the 1 hour or the 15 minutes. They don't care. Their time frame is weekly and monthly, and that is all you ever see them do. Okay, those are the position traders. But for position traders that are institution traders, you will definitely see them with a much bigger lot size. Okay, a much bigger lot sizes, maybe mini or even standard, based on their account size. All right. So this is how you can also like plan yourself accordingly. Okay, while you trade, while you position your trade, while you span for your trade, while you also plan for your trade as well. All right, you need to understand how trading works and how you can make it work better for you. All right, it is as simple as that. So moving to the next point, which is now explaining what scalping means and what day trading means, because they are the short-term trading style. So scalping is the most short-term form of trading. Scalp traders only hold position for seconds or minutes at most. These short-lived trades, I'm coming. All right, good. So this short-lived trade targets small intraday price movement. Okay, the purpose is to make lot of quick trades with smaller profit gains. That's why you see them with $5, $5, $5, and like maybe 10 to 20 trades. You understand? They just want to make small profit with in a multiple places, so they can close it and it result to a lot of profit or a significant amount of profit. I'm also doing that purposely because of education. All right, I'm not a scalper. I don't scalp at all, but sometimes I try it out. Okay, especially during the news, I try it out. All right. So the purpose is to make lot of quick trades with smaller profits, but let profit accumulate throughout the day due to the sheer number of trade being executed, okay, being executed in each trading session. I think you cannot go through this text yourself, but I've actually explained what I'm trying to say here. Okay, they're trying to make sure everything accumulates together so that by the end of the day, there was a time when I was trading, I opened like 150 trades in a single day. That's just crazy, and I ended up blowing my account. I ended up blowing that account. It's always on gold. You can guess. It's on gold. Sell, buy, sell, buy. On the live account, for goodness sake. I open like maybe 20 in the morning, maybe 15 in the evening, like every hour. I open like 15 to 20 trades every hour. It is crazy. It was really crazy then. 15 to 10 trades between that every single hour. Make profit there, make losses there, just keep buying, keep selling, multiple places, just keep punching the numbers. Pa, 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 pa. Buy, sell, buy, sell. I ended up blowing the account anyways. Then that was like 2019. All right. So now let's talk about this. And then the style trading requires a tight spread and liquid markets. As a result, scalper tends to trade majorly. They tend to trade the major pairs. But right now, some scalpers don't even trade major pairs because of the volatility. Don't forget, they need what? They need a liquid market. Okay, they need a tight spread, a liquid market, and high volatility because they need to see the market that runs. That's why you see most people on DAX 40, on US 30, S&P 500, good. Not because they like it, but because they need a very speedy move market. Okay, a very speedy market, something that can make money fast and that can also lose money fast. Because you should be rest assured that anything that can make money fast in the market can as well do what? Lose money fast also in the market. So for the smartest among them, among the scalpers, they do it with euro dollar, pound dollar, or USD JPY. But I think the time has changed that people trade euro dollar as scalping for scalping. People don't do it again. What people turn to now is gold and US 30. Okay, they call it US tech. All right, it is a lot. It's a lot to unpack. All right. So moving forward, they target the range of 10 to 20 pips, and time frame is within 15 minutes to 1 minute. Okay, they can scalp on 15 minutes, you can scalp on 1 minute. The time frame is not always above that, 15 to 1 minute, and they are done. Okay, so now moving to the day trading style. Okay, for those that are not comfortable with the intensity of scalp trading, okay, but still do not wish to hold position overnight. Don't forget this. They do not wish to hold position overnight. Okay, day trading may suit you. You either enter trades and exit that position on the same day. Okay, unlike swing or position trader, removing the risk of any large overnight moves. At the end of the day, they close their position with either profit or loss. They don't care. Okay, they do what? They close their positions, either profit or loss. And then the next day, they look for another trade setup. They go again. Every day, they open the trade, they open and close the trade. The next day, they look for another trade. Whereas a swing trader will just take the trade to run. Okay, either in profit or loss. At least the loss will take me out in loss or stop me out in stop with stop loss. And the profit will definitely continue to go as long as possible. You continue to trade it. But for day traders, profits they close before the end of the day. If you fail to touch TP, they close before the end of the day. And loss, they close it as early as possible as well. All right. So these are the tactics when it comes to day trading, okay, and what and scalping. All right, day trading and what and scalping. It's actually a very profitable system, or let me say profitable trading styles if you understand how it goes. All right. And lastly, their target ranges from 30 to 60 pips. All right. 30 to 60 pips. That's all. They don't really need much because it's during the day. So they don't mostly extend their stop loss, take profit to 120, 150. No, they don't do that. Unless they are trading a high volatility pair or a high volume pair like GJ or UJ. You know, GJ can do 400 pips in a day. So if it's in their favor, then they will definitely make money. If it's not in their favor, definitely they will lose money. So now their time frame ranges from 5 minutes to 1 hour. All right. They don't look at the 4 hours, they don't care about daily, they don't care about the monthly or weekly. It's between 5 minutes and 4 hours. I mean, on 1 hour, and they only check 1 hour. 1 hour is like the major high time frame for them. So they execute their trade mostly on 5 minutes or 15 minutes. Whereas what's it called again? Scalpers execute their trade mostly on 1 minute. Okay, mostly on 1 minute. But day traders they execute their trade between 5 minutes or 15 minute time frame. Okay. And right now I'm going to show you an example of a trade I pick. I'm going to play it now. So this is how a trade I pick play out. Kindly watch. Okay, it's just for 5 minutes. All right, you can see the way I click the trade. First thing I did was I already had a sell trade open right here. I already have a sell trade right here. So what I did next was to take a buy. Okay, I will change this to buy now. You will see it. Okay, once I change it to buy, then you will see that I click the buy and the market will go buy. Or maybe it's a sell. But let's see. But in this trading activity, you can even see my loss right here. Okay, I have a loss of what's it called again? Minus $149. I was using 0.5 lot size here. Like I said, we use as a scalper, you have to use a big lot size. Okay, but I had to chip it down because of my margin. I have to reduce the volume or the lot size to 0.3. So let's continue with the video. All right. So that's another sell trade I just took. All right. And you can see immediately I take a trade, I trail it immediately. I set trading stop almost immediately. Okay. The moment I pick a trade, I set trading stop to like 2 pips or 3 pips. All right. That's the 2 pips trading stop. The moment the market move up in 2 pips, I want to get out. Okay. So I'll click a buy now. And I buy sell. You know, you must have when you want to scalp, especially if you want to scalp buying and selling, you must have what? You must have you must be working with a broker that won't play against you when you're edging your trade. Okay, because you might have to edge your trade. You can see that trade has closed out in profit. Okay, I think it closed in like maybe $18 or $25 profit, just with maybe 3, 5, 6 pips. And I have $18 profit. Imagine that craziness. But I'm using a very huge lot size. You can see that I'm taking another sell from that top. Okay, I'm taking another sell, and it's just a very fun move. But you must have an internet. You must have a very. I believe you can also see the video I'm playing. Please confirm if you can see the video I'm playing very well and it's clear to you. Okay, it's very important that you are watching the video I'm playing very well. All right. So as you can see, this particular trade right here. Okay, this one is already trailing, and you can see it's trailing in profit right now. Look at where I took the trade, and look at where the trade reached, and it's already in profit. So let's check. Let's actually do a little bit of what? A little bit of investigation. So right here, I opened the trade at what? 2643.7. No, the last 7 is as simple as what? As what's it called again? As a pipet. We don't count it. And you can see my stop loss right now, which is my trailing stop. It's at 2643.6. So I only had 1 pip, and that 1 pip alone is what is giving me $10 right here. Imagine, imagine, okay, imagine. So that is what you see. The moment you close, if you move down a little bit more, maybe that's $20. I'll close it. I'll look for another one. Close it. Look for another one. So let's continue with the video. All right, let's continue with the video. You can see that trade is already closed out. I think I open another one right now. I should be able to open another one. I think another sell. Yes, it looks like the market is going down. So I had another sell open. You can see immediately I started trading already 2.5 pips. Yeah, two pips. I think it's 2 pips. I'm saying you have to be very fast. You have to be quick with your hand. This is not the time you need this is not the time someone will be calling you, your internet will be slowing down. You can't afford to have a slow internet in this kind of environment. You can't. It is impossible. Having a slow internet, that's gonna definitely that's not going to end well. All right. And you can see what I did here. I'm trying to while I have a trade I'm about to open, I'm still trying to manage this one very closely to be sure that okay, it doesn't get up or down. Okay, you can see I'm not even using stop loss because definitely I will close some trade in loss. It doesn't matter. Okay, I'm open to closing losses, but I just want to open. I want to close much profit than the loss. I'm open to closing losses. When you're scalping, you must be open to close loss. Okay, the reason why people lose money is because they don't want to close loss at all. You must be open to close, especially as a scalper. You have to think on your feet. You want to have a very stable internet. That's not the time you want to be watching YouTube or you want someone who want to be calling you and you want to be attending to some calls. No, this is not the time. This is time for you to what? To sit down, to watch, and to learn. Okay, to sit down, to do what? To watch and to learn. Okay, so let me play it again. I am almost out of time. All right, I'm almost out of time. So let's play it again and then we continue. So let's see how that goes. How many minutes is remaining? I think we've already watched 2 minutes. We've watched half of the video already. Look at how the trade is running right here at this other side. You can see the loss is reducing. The profit is also there's no profit here. There's still losses. Okay, but I've closed a couple of profits also. So let's see how it goes. All right. You can see you have to think on your head. I mean, on your feet. You have to reduce your loss. You have to increase your position size. You have to master everything. You have to set trading stop in case the market is going against you. You have to think on your feet. Okay? On your feet. You don't want to play with the market. This is not the time to play around. Okay, you can see if the market started dropping further, I am willing to close this trade. You see where my cursor is? My cursor is already at I want to press because I know when the news came on Friday, it favored dollar very well. So I knew that this gold will still drop further, even though it didn't drop. It came down here actually, and then it went back up. I think like 2 hours after that, after this whole move is done, it went back up on Friday. But I knew that for a moment there will be a speculation that the dollar gained some very significant strength and it went up because of the fundamentals that came on Friday. So this happened. I had to wait. Okay, I know there's going to be a pullback for sure. This is 1 minute time frame, don't forget. I know there's going to be a pullback, all right? And I'm just waiting for it to come down so I can take a sell. All right, simple as that. So let's continue, guys. Okay, you can see my hands already here. I'm willing to close that loss just to make sure it doesn't compound to become bigger. Sometimes you even close the loss and then you see the market start going in your direction again. You have to click it back again. Okay, you have to think on your feet. Okay, on your what? On your feet. So let's see how it goes. Let's see if I close that trade. Okay, let's see if I close it. Okay, market is still in that middle, in that very small middle. So let's say if it goes up and I was able to close the trade. I have two sell position, I have one buy position. All right, and they're all being trailed tightly. Okay, 2 pips trailing stop. I think I'm about to open another one. Good Lord. You just have to like think on your feet. I want to take another sell. I think it should be a sell. It should be a sell, yeah. Just to mitigate the loss I will be taking on that. I will close that buy now. I should be able to close that buy. Where is the buy? I should be closing that buy anytime from now. I should be closing the buy anytime from now. I have 3 sell trade and 1 buy trade. Okay. 3 sells and 1 buy. If the market jump up right now, it will be a mess. It will be a bunch of mess for me. Well, let's see how this goes. I think okay, one just closed. The sell I took other time was I just closed that one. I mean the last sell I took. I'll be closing this buy now, anytime from now. If it cross over 200, I mean over $100, I should be able to close it. And Yes, I think I'll be closing down now. Come on, let's go. Close the trade. Okay, I close. I thought I closed the two. Imagine the trade is now running profit. Look at everything. Trading stop. Everything has gone. Voila. Voila. We are done. 5 minutes, guys. 5 solid minutes. We are done. Okay. 5 solid minutes. We are done. And let's see the profit that I made. Let's see the profit I make. So I will drag. I think I will drag it up now and we see the profit. I think it's around $96 thereabouts in less than 5 minutes. Okay, in less than 6 minutes, actually. In less than 6 minutes. Okay, you can see right there. Uh, yes, you can see that is the result right there. That's the result right there. You can see $56 profit, minus 121, 66, minus 7, $2, $19, $78, $48, minus $1, minus $1.20, $14.40. How many trades is this? Let's count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 trades in less than 5 minutes. And look at this position size. If we should add this up together, this should be around maybe 7 lot size. 7 standard lots. Let's actually add it together. Okay, real quickly. Let's try doing that. So first off, I have 0.5 plus 0.5 plus 0.5. Okay, so I have how many 0.5? 1, 2, 3, 4, 5, 6, 7. So I have 7 0.5. So let's make it 0.5 times 7. So that's 3.5 plus how many 0.3? 1, 2, 3, 4, 5, 6. That is 3 times 6, 18. That is plus 1.8. Okay, 1.8. And then plus 0.2. That is 5.5 lot size. Sorry, it's 5.5 lot size. I used 5.5 standard lot in less than 5 minutes, guys. In less than 5 minutes. That is crazy. That is scalping, guys. That is pure scalping. It doesn't get better than that. It doesn't get easier than that. Okay? That's what we call scalping. Okay, it takes time. You have to master it, and you must have enough money to do all of this. Okay, you can't scalp on one $10 account. Nah. Scalpers have 10,000, 20,000, $50,000 because they have to be open to loss. Imagine a $121 loss. I didn't even look at it. I had $136 loss. I didn't even see it. My focus is just what is in front of me right now, right now, right now. You understand? These ones that didn't show red, that means I closed them manually. This one was closed manually, was closed manually, was closed manually, was closed manually. The rest were what? Trailing stop. You can see all of them are stop loss, right? And the stop loss in profit is trailing stop. Okay, no TP for sure. You don't want to set TP or stop loss. No. All right. So this is scalping. And I hope you enjoyed this session. So I will see you all again tomorrow on Tuesday. For people that attend our beginners, our who that attend our daily life session, all right, I will see you in the morning. Okay, so do enjoy your evening. The video will be available on YouTube before tomorrow morning, or let's say before tomorrow evening. Okay, so I will see you all on Thursday for another session. Have a fabulous day, trade safe, and be good. Peace. Don't forget to go ahead to our YouTube channel, subscribe to the channel, like the videos there, okay, share with your friends, and then I'll see you in the next one. Have a nice day. Bye-bye.